Today's trading tip could turn out to be your new secret whip. So brace yourself.
Are you curious about what separates the top traders from the rest? Well, one of the things is they simplify their stock searching parameters. I'm going to talk about that today as we head into the stocks in the news.
So taking the stage this week, we're going to be taking a look at first AMD. And then after that, we're going to take a look at Tesla. And then after that, I'm going to surprise you because I am going to talk about the Biotechs, but I was shocked when I looked at the charts today and found something that was just, it blew me away. So let's start with AMD. AMD had earnings last week. AMD. Look at that blow up on AMD. Now, with it taken up, it is in blue sky territory. How high is it going to go? That's one of the big questions you should always ask yourself. How high is it going to go before it potentially starts to turn, at least slow down? And the quickest way to do that, and I'm just going to step through the quickest, go to your fibs, go and track from the high on the weekly chart to the low of its last move. And then that's going to start triggering off some ideas of where it could go. 1272, that's the number one target whenever you get a breakout like that. Oftentimes, that's where things slow down. However, if we break out the 1272, look for it to go all the way up to the 1618, which is up at 241.03 right now. So that's the upside target on AMD. AMD did a really nice job of crossing back to the upside. At the same time, do I see any kinks in its armor? And the answer to that question is yes, I do. And here are the kinks that I see right now. One, I've got a head and shoulders pattern forming on my momentum chart here. It can continue to go up because it can go a lot higher even after momentum is shifted. But that may be an indication the momentum is going to be shifting in the offing. Secondly, even though I've broken out with my daily TSI, I'm still showing negative divergence as I broke into new highs. I would put an alert right there below the 1272 extension, put an alert at about, let's say 207. It's about $5 away, and see what AMD does when it gets back there. Also, on the flip side of that, watch for a pullback towards the breakout area. So I would say first put an alert at 193 and then another alert down at 186. That's when AMD would become interesting for me to want to buy. Tesla. Those of you who watch my video over on the YouTube channel, Market Tech Talk, you know that I have done an expectation of Tesla moving all the way back up here to about the 200-day moving average again at the downtrending channel line. That's still my expectation. Price X's are still moving this way. What is one of the big problems you see with Tesla right now as you look at this price action? For one, this is constructive. However, with all the other magnificent E7 stocks just off to the races, this is kind of wimpy. We are still below the 200. We are still below the 50-day moving average. So this may turn out to be just a rally back into resistance, and then we get a pullback, and then a stronger move up. We'll see. We will see. We don't know what's going to happen on it yet. I'm still projecting that, we could get up here to approximately the high. If, for whatever reason, it only gets up to the moving averages here on the weekly charts, which is here, that's an indication of weakness. And if it breaks back down on the downside, watch out for those lower projections down at the 152 and the 118 level for Tesla. Now, I said that I would take a look at the Biotechs. I'm going to. I thought the Biotechs were actually topping, and they are kind of. Mixed signals on the Biotechs. We've got oversold market TSI momentum looks like it's turning down. However, weekly momentum is going higher. We had a gap up, but I had a Harami shooting star a bearish engulfing, and then today I'm getting an inside day. So, like I said, it's a mixed signal on the biotechs. And I think that the companies that are involved in this area, and this is XBI, I think the companies that are involved with this area are also getting mixed returns. But then the surprise for today is this. I've been talking about the seasonality of gold, and oh my gosh, it looks like it has kicked in. And now we've broken structure on gold back up to the upside and actually come really darn close to breaking out of this resistance area right there. At least it's stuck there. So this is telling me that gold perhaps has turned around. And so I'll be looking for some kind of a pullback back into the moving averages or back towards the downtrend line here to kiss the trend goodbye. When I do that, I want to be also looking at GDX, which is the gold miners. It also is starting to reverse and turn around and is making some very positive moves for a while. And note over here on the weekly chart, my TSI is just about ready to cross to the upside. And I had a 2-line cluster a couple of weeks ago on the market forecast, and that's looking very positive. Also, throw on top of that our good old buddy Nugget. And Nugget is basically showing a similar type situation. I'm not ready to buy it yet. However, we are getting a really nice breakup from a consolidation. So it's moved back up on my list for your information. Those are the stocks that I'm watching right now.
Momentum, momentum, momentum. Are you leveraging the full power of your momentum indicator? Today, I'm going to share with you in a tech tip why I think that the True Strength Index is head and shoulders above every other momentum indicator. Let's check it out.
It's time for Market Trading Tip. And our trading tip today, have you ever wondered why traders rave about TSI or RSI as a momentum tracker? Okay, let's take a real hard look at that. And what I've done here is I've actually laid in three different indicators here. The middle indicator is the out-of-the-box TSI. And with the out-of-the-box TSI, what you see is it clearly lags signal-wise the RSI, which is down on the bottom. The RSI on the bottom is giving some indication here. We're up above that 70 line and dropping back 30 line at the bottom. And those tend to be good trigger points for larger moves. Let's just leave Nugget up here. And we've got a bullish move back up to the upside. So that's a good thing. The other thing that you can do with the RSI is you can highlight and draw trend lines in. And once you get a broken structure, that gives you an idea that, my structure has been broken. My momentum has shifted to the upside. I want to be a buyer now. So that's what's going on there. Now, as you see on the regular TSI, it lags and its signal is after the RSI. When I started using this about 10 years ago, I did some research on it. I modified the TSI to basically be the 883 exponential with my overbought at on the plus and minus 42 and using a 20-day exponential moving average on it. And notice how all of a sudden my triggers for my crossovers came much more into line with the RSI. While it doesn't measure exactly the same thing, I found it absolutely phenomenal, and it's great for doing patterns. I'm going to take the one that I modified off just so we can have a more direct comparison. And as you see on that comparison, just start doing some projections. Here was my signal on the RSI. It almost lines up perfectly with the TSI. Here was my signal on the RSI. It lines up almost perfectly with the TSI. One of the things that might be a suggestion if you're looking for confirmation is to have both on your charts. And if you do add it to your chart, take something else off so you're not just adding to chart complexity. And here, what you have is when it bounced back up off of the 70 line, you had a double cross here on TSI. And like I said, it gives you a really great idea on how to utilize the TSI. Well, not how to utilize. They complement each other very well. So if you've never thought of doing that, take a look at doing that on the TSI and RSI, and double check. The other reason why I'd use the TSI better than the RSI is because my TSI goes across any time scale, weekly, monthly, daily, intraday, and I don't have to change the parameters. So it's simplified. Again, we're all about less complexity and more simplification, and that's exactly what we got with that. Hey, this is a good point, especially when we're trying to make it simple. It's the trader who can manage their emotions and stay disciplined that come out on top per Mark Minavini. Remember when I said earlier that I would cover another tool that would help you, simplify what you're doing? For me, this tool is an absolute must to help untangle the trading complexity, and that's to have a journal. And that's my journal. I'll put a link down in the comment about how to get the darn thing. But there's more next Monday. My good friend Mike Lamont and the ancient trader me, we're going to basically start a new podcast, and it's called Trading Truths Podcast. Mike and I are going to be working on dispelling the myths of trading and things that traders believe that impact both their mindset and their systems. And so I invite you to join. It's Monday, March 4th at 12 p.m., not Pacific time, 12 p.m. Eastern time. Remember, simplify your approach and watch your trading evolve. So if you're interested in diving a little bit deeper into greater trading tips, check out these videos that will be popping up here shortly. And remember, hit the subscribe button, and please tell your friends and neighbors about Trade Your Way to Freedom insights on Market Tech Top. I just want to remind everybody that all the materials we do present are for trading purposes. Traders should always pay for trading any new method prior to the risk of their own personal capital. Past performance is not an indication nor a promise of future performance.